Thursday, June 26th, market analysis, Stan Ehrlich. Good morning. 10:02 California time, a little after the middle of the traditional hour trading day, California 6:30 to 1 o'clock. We have new highs again in the stock indexes. For me, this is kind of frustrating. Oh, it's happened before, and usually sticking to my guns pays off, which I'm going to have to do again, of course. So we are getting closer and closer to overbought again, possible double or triple divergence, and we have a new high for the move up since February, but we are still in this range where the market topped out before essentially November, December, January, February. A very strong historical resistance area. It is historical highs. They are historical highs, one of which has already made new historical highs, QQQ. Looking at the 1-minute chart, I don't see anything toppy at the moment, but I don't like markets that have gone all the way up toward historical highs, and here's the spider, very, very close, and has divergences, has gaps to close below the market, and is almost overbought. That spells, watch out, it could turn down very dramatically, very quickly, suddenly, maybe when the market's closed, and trap you. So I'm not encouraging any particular new long positions up here. I am watching for sell signals and indications that the market's starting to head south, and a very early start, but I haven't seen them yet. The 1-minute chart, we're very close to the highs. Still the little engine that could chug it away, making new highs. We are now overbought officially on the QQQ and also in all-time new historic highs for the QQQ. Yep. So the overbought condition warns me not to go long and to tighten up protective sell stops on any long positions I might have had. Plus, there are gaps to close below the market. Now, it looks like if we have a correction, it's going to hold and the market's going to turn back up. That would be very bullish, intermediate to long term. I'm not sure about that. I'm going to have to see how the market holds. If it does, when, and it should be very soon, this week maybe. Well, it's already Thursday. The next week, turn down. It's not yet. So I'm not short yet, and I'm not screaming go short yet. And obviously, these are all my personal opinions. And this is for educational purposes only, and disclaimers for the SIPC and NFA and CFTC. So I do not have anymore any particular licenses. So here we go with QQQ. Anytime now, this thing could fall apart and start heading south. The NASDAQ futures contract is also very close to making new highs for the whole bull market and is very close to overbought. Both are very dangerous situations for topping out in. No gaps to close, but very good support on a downside break. I can't, at this particular point, expect any huge bear moves. Period. Pretty good downside correction, maybe new lows for a month or two, but I don't have any long-term bearish expectations at this point. NASDAQ 1-minute chart, chugging along, still looking like it could make new highs again, as much as that pains me, so to speak. Because I like to be right, obviously, and not so far. YM new highs, but nowhere near historical. And that was during November and January. And in January, we did get a bearish engulfing at the top of the rally. Perfect. And almost the lowest low, April 9th. So not quite overbought in new high ground for a couple of months plus, usually pretty bullish. Getting mixed signals here from a variety of directions. I like a little conformity, but I'm not getting much. 1 minute chart just made new highs. Looks like it's going to do it again. The Russell is a different animal. No new highs for a couple of weeks, but in a major, major resistance area just above. So it looks like it could roll over a bit and make some downside headway for a correction, but I can't get super bearish. And the Russell 1 minute chart starting to slip off a little bit. Okay, waiting for some definitive information on stock indexes to help everybody and myself along. Bonds did make another new high like yesterday by a very minor amount, but it just keeps chewing its way slowly higher. Looks like it has a chance of having a new high close for the move up. But it's getting slowly closer to overbought, and it's getting very slowly closer to a resistance area, which I think is going to stop the rally. 115.5 up to about 16.25. Next, we are through the resistance in 10-year notes, but we are also overbought today. First time in several weeks. Well, quite a while, actually, since early April, about 3 months. 2.5. If this thing fails today, closes back into the support area, now support because we're above it, used to be resistance, then I could get a little bit bearish, but that's not happening. We might see another day or two of strength and then turn down. Just because you're overbought today doesn't mean you're turning down today. Bearish engulfing, huge reversal on Monday in crude and across the board in the energy. So this is going to be interesting if you haven't seen it already. No gaps to close. Big reversal on Monday. Big downside follow through on Tuesday. And a little bitty bounce yesterday. And so far, a small little bitty bounce today. Normal. We are bouncing off of support very accurately. So maybe a little bit more time and a little bit more of a bounce. Hard to tell how much. And then lower. Still bearish on crude. And you'll see about the other ones in a moment, except for natural gas. That's going to be a tough one. Here we go with natural gas. We are now below the neckline. Let me make a couple of adjustments here. That's correct. On what is apparently a large head and shoulder top with a bearish engulfing ER sell signal on the first shoulder on the far left, November 22nd of 24. Came down, created the pivot point. That's the lowest low after the first shoulder. Now we do have another couple of internal shoulders, so to speak, inside shoulders on the way up. A couple of months ago, I thought that those were the beginning of the top. Not anymore. Then we came all the way up to the top with an upside exhaustion gap closing below previous rally highs on a spike up. This is the kind of thing that I warned you about many times. Unfortunately, it didn't get read because you don't have a bearish engulfing. It would have been if we got below the previous day's low, which did not happen. But again, exhaustion gap, overbought conditions, came down, tried to rally, made lower lows, tried to rally, couldn't do it, and then started to come down even more. Now, that's a bad buy signal. It didn't work, point blank. There was a little loss involved, almost assuredly. Then you got oversold again and bounced for a couple of times, matching the couple of times over here. But I got a little perturbed when the market wouldn't break what I thought was the original neckline, this one, and it touched it, came back and did it again and came back up. So here's why I now think this is finalized and the price pattern is complete, and we have a legitimate downside breakout on a fairly large head and shoulder top in natural gas. Because on Friday of last week, the 20th, yep, we had another bearish engulfing. It did challenge the previous rally high a month earlier. The timing is uncannily almost exact. We are only missing one single day. If you measure the date, the number of days from June 20 to the top of the market, March 10th, you'll find you're only one day off from the exact same number of days to November 22nd of 2024. Perfect timing. Both have bearish engulfings on the rally highs. And now the neckline was crossed yesterday in one case, the larger patterns case, and almost crossed on the smaller patterns case, which I'm now going to erase the line. I don't think that's relevant anymore. We're now below not only the neckline of the bigger pattern, but the old one for the second day and making new lows for several months, for the year, as a matter of fact, for half a year approximately. Downside move, fairly sizable, probable increase in volume. I like what I see. I'm claiming this is the official breakout yesterday, partial, and I like it. Now, we're not oversold yet, and that's not uncommon on the downside breakout of patterns. So maybe one or two more days down to the support area at 3.2. Then it bounced back toward, not necessarily up to the neckline, but could be. And then turning back to new lows for the trend. My downside objective, remember, is very low, around 1.0. Next chart. Heating oil. Bearish engulfing on Monday. Follow through on Tuesday. Wednesday, nothing to speak of. And today, a little bounce. No big deal. Looking for new lows. Excuse me. Looking for a test of 1.9. Frankly, I think 1.8 and 1.85, 1.83 are very much in range, expected to be tested in the next few weeks to come. Bearish, gold, silver, platinum, then copper. Outside up day at the moment, but that can change to an outside down day. You cannot erase the fact that you've got the higher high, lower low for an outside, therefore engulfing, either bullish or bearish day, unless it closes unchanged, which is unlikely. So a little bit bullish on the gold at the moment, but we are between a rock and a hard spot. And I don't know. It could rally again back up to the resistance. It could drop first down to the support. I just can't tell very well on gold at the moment. So silver is rallying a little. Got overbought. Has a divergence top. I don't think this is going anywhere. I vote for another new low below yesterday's lows next week. Copper. Sorry, platinum. Platinum is overbought again. And having a sharp higher day. Also, it's getting above a major resistance area for the first time now. So, there we go. I am thinking that this is something like a bull trap. I don't trust it when it's... Hang on a second. Still in the ballpark of major previous important tops. And wow, very accurately so. Super, super close. It did make actually a new high from a year or two ago, and it's still there at the moment. Let me rescale. Yep. So watch out. I wouldn't be a buyer here. I'd wait for some kind of a correction, which I think is imminent. Copper, too strong, too fast, too quick, overbought. Looking for a downside correction. Soybeans, oil, meal, corn, wheat. The only saving factor is soybean oil. And I'm worried about that one because nothing else seems to be doing very well at all. We are oversold in beans, but it's a new low for a couple of months, and it looks like it's going to work its way lower again, probably down to 1,000, 990, 980. After a small bounce up to resistance, which should be around 1030, low 30s, and then back down. Soybean oil is the only possible saving grace. I have put back the markers for the shoulders on a large double shoulder head and shoulder bottom that's a little on the sloppy side, but a week or so ago, when I was out of town, it gapped up, gapped across the neckline, and stayed above it. Unfortunately, we did have a bearish engulfing ER sell signal, which is now the exact high day, and pushed it back down below a support line. But the actual neckline is still below where the lows are in the last couple of days on a downside retracement, and we did gap down slightly. So I'm thinking between today's lows and a little bit lower, maybe around 51.11, we did bottom out today or very soon. And the upside objective is very, very large. I am looking if this pattern works correctly for 62.5. And it's right now 52.30. So a very big 10-cent move, $10 move in oil, if it works correctly. Now, you're not supposed to go below the neckline. You're not supposed to close below the neckline, which is a big no-no. That's a sign of failure. As long as it stays above the neckline for the lows and the closes, we're okay. And I would love it if this had some sort of a bullish engulfing or buy signal or started to make new highs, got up to the gap closure and kept on going up instead of stopping. Anything that's going to cause more bullish continuation. But I don't have many helpers here. What about the next one, soybean meal? Are you kidding? This is a new low for years. Only thing I've got is oversold, and it is very, I'm screaming bloody murder. It's below 10, 8.34 at the moment. I think it's about to turn back up, but resistance at 294 approximately or a bit higher should stop the rally and making new lows later on again. So this is a momentary, extreme oversold situation, which should cause a momentary short-term, I don't know, a few days, a week or two or three, rally, and then down again. Corn, same damn thing. New lows for a very extended period of time, oversold conditions, lots of resistance above the market. A rally up to resistance probably will stop the rally, then turn down again, and wheat looks like it's about to do the same thing. We're not quite oversold, and we're not quite new low ground, but it's sure as heck heading there. We did make new lows for over a month, and there's nothing to speak of as far as support is concerned below the market. Grains don't look good except for soybean oil. Next, Shell. And I've got a new stock, NVIDIA. Now, it replaced Carvana. Sharp spike to the downside. I double-checked it for you yesterday looking at 1-minute data, and it's correct. Came down, closed the gap, plus a chunk more, bottom of support, came close to being oversold, and simply turned around. So, I think we're between the support level and resistance levels for the moment. We did get a sell signal on the exact high day. That's great. 2 big profitable days immediately afterwards. Nice. But I'm not going to speak up much more. I'm relying on my bearish engulfing air sell signals to cause new lows soon. Now we've got Apple. That trend line has stopped the rally 3 days in a row now. And that is essentially the 4th time. First time, you don't know what's going on. It's simply a pivot point. The second time, you're creating the 2 points you need for a line. This is proof that the line is relevant, and the last 3 days is proof that the line is still relevant. So I'm looking for a little bit more of a dip down to 193, 194, and test support. Now, Tesla, probably a little bit down again. See what happens when it gets down to support at 280. Brand new stock, Tesla. All-time new historic highs. That sounds real bullish. But we left gaps behind, and we're overbought. I think we're about to turn down on Tesla, close some gaps, and the important part is, will it hold support levels around 141.5? Back to the E-mini, quick check. Market just made new highs again. Don't see anything turning down yet. Very, very suspicious, and that's the best I can say at the moment. I'm sorry I don't have a turning point for you on the stock indexes. I'm looking for it. Profitable trading to you.